Hey,
going on?
hey,
How are we doing today?
Let's go.
Doing great.
it's
Yeah.
a good day.
Starting
You guys have
our
just been
day
on
off.
spaces on the internet all day
I
long, all week long.
I have spent the last like 24 hours in Discord, basically. I have not left my Discord cave,
And not
so
our
to speak,
Discord, actually,
for
which we'll get into.
yeah, the Aerodrome Discord,
Oh
right?
yes, you're out there. I guess people have the questions.
Trying to woo stakers. Is that what you've been trying to do?
Just educate,
Right.
inform,
Right.
help people
Right, of
understand.
course. Okay, cool. So you guys are the co-founders of Syndicate, which is, building towards a community-owned internet and really trying to make it easy to kind of spin up infrastructure for, for projects that want their own sequencers, their own chain. So you guys made a big bet on the app chain thesis over a year ago. Can you just kind of fill us in on the journey you've been on since then and maybe how that thesis has evolved, if it has at all? Want to take this one, Will?
Yeah, sure. So essentially, I mean, you guys have known us since the very beginning, since before the beginning, actually. And essentially, we started out, Ian and I, all the way back in 2018, thinking about how to get more and more communities on chain. And we were like, is it the is it the use cases that get them on chain? Like, can we get a bunch of investment DAOs on chain in 2021 and bring them there? And what we saw was that a bunch of people wanted on-chain communities, ranging from investment DAOs to groups like Decrypt/Org Radio, all the way to major companies like Nike. But what all of them were hitting was as soon as they hit like more than just toy levels of usage, everything broke. Like we spiked gas fees on Polygon to $1 back in the day, back when Polygon was seen as cheap. Even right now, if you submit 12,000 transactions on base at once, you'd spike gas fees to $1 as well. And essentially, what we saw was communities need to get on chain, and they need the infrastructure that lets them scale on chain. But importantly, they also need true ownership of that infrastructure too. So it's not enough to just move everything to rollups that are attached to like a credit card provider on a cloud host. What you need is true ownership, true community control, true control over fees, true customization. That's what we're building. We call it smart rollups with smart sequencers. And we want to bring as many groups on chain as possible and have on chain adapt to them and not make them adapt to on chain.
So I want to get into some of the specifics of what you're building, but I'm curious for your take on. It's been a little while since we've chatted about the landscape over the last little while, because I think there has been this idea of alternate L1s. Then we've seen roll-ups. Now we're seeing folks build their own purpose-built L1s again, EVM compatible, maybe not. Like some of the biggest movers in the DeFi or in the fintech space are coming into this space. So I'm curious, has that increased conviction, shifted conviction at all in sort of this idea of community-owned chains?
Yeah, it's really interesting because I think even 3 months ago, it was not well understood or well believed that there would be a lot of chains. I mean, I remember having conversations with a bunch of people, whether founders or investors, and them saying, and this was not that long ago, right, that it would only be basically base Ethereum and Solana, and nothing else really mattered. That was before Robinhood announcing the L2. That was before Stripe. That was before Arc. Now the list goes on and on. Hyperliquid already was, had an L1, but I think it's, becoming quite clear that, with USDH and stuff that, there's a lot of potential there. And so I think the conversation has started to shift pretty noticeably. It's like, okay, well, yeah, it's only okay. It's not just base and Solana. It's going to be base Solana and Tempo and Arc and Hyperliquid. But you take that kind of even further, right? And I think right now what people are saying, well, it's not going to go more specific than that. But the reality is, like, when you look at what are people doing here? Tempo is basically doing advanced customizations. Now we could talk about various other reasons why they may be doing it, but if you look at from a technical perspective, what is it that they're actually implementing? They're implementing all these kind of customizations that are unique to the Tempo use case and ecosystem, right? even you look at Hyperliquid, right? More recently with USDH and the conversation there, where they're literally enshrining a stablecoin into the L1. Okay. Now, Mert, even this morning, was mentioning this is going to come to Solana, and we're going to enshrine, or we should enshrine a stablecoin into Solana. What is actually happening here? What's happening here is that protocols or L1s or chains, whether they are L1s, L2s, whatever, they're basically enshrining more custom functionality and protocols and I guess customizations into the network itself. They are effectively becoming either ecosystem, use case, or application specific chains. So you take that to the logical extreme, like you project that out a year from now, 2, 3, 4, 5 years from now, there is no limit to that. And actually that is what we think is the way. I mean, that's what we learned with some of these things like Degen Chain and Ham and Gold and some of these things that we had worked on in early 2024 is like they were actually the canary in the coal mine, which is, okay, we have a very specific use case. We have a very specific community. How do we make this network kind of truly ours? Whether that is like technically being able to like do certain things or enshrine certain things, or most importantly, which is sort of our long-term view, that these tokenized communities actually control the network themselves, meaning the parameters and the economy of the network, which necessarily implies that they can control the sequencer or the validators, right? Programmatically through verifiable code, which is the smart sequencer and smart roll-up technology that we built. So I guess in summary, like, I think we're still kind of at that phase where people are like, yeah, it's going to be 20 chains or 50 chains. But like, it really doesn't stop there. And especially with technology like what we built, it really takes that all the way, like kind of like what AWS did to cloud, right? When people were just like, oh, it's just going to be a few large companies that can do kind of like servers of their own. Actually, no, it's going to be like all developers, even like, solo developers in the future.
I mean, what do you think has to change for that future to actually come? Because it hasn't really worked outside of the kind of few success cases that you mentioned. We've even seen projects like Zora who have, way more resources than most companies and ultimately bail on the idea of running their own chain to participate in a larger ecosystem. So is it infrastructure? Is it like what needs to change?
I mean, I would say here, and Will, you should jump in as well. But like, infrastructure is not hot right now. Like, people are talking about other things, but the reality is like, yeah, I mean, the infrastructure layer is still not entirely done. And what we are really doing at the core, if you think about it, is we're taking sequencers, which are these off-chain centralized servers, and we're turning them into smart contracts. And that improvement is like a 10 to 100x at least improvement in terms of, operations and cost, let alone all the other kind of special capabilities that it has. So if you look at like kind of the progression of like roll-up infrastructure, even specifically, right? A couple years ago, prior to the modularization and alt DA, it was like several $100,000, or more, millions a year to like run one of these like L2s or roll-ups. RAS modularization and alt DA took that down by 10 to 100x, which was amazing, right? But it still costs like 30 to 50 plus grand to run one of these rollups. And our technology, we think or expect, will take that down by another order of magnitude in a similar way to alt DA and RAS and the modularization of rollups. Well, maybe there's something more though that you want to add.
Yeah, I think also the user experience side has made a big difference. I mean, the fact that we can have embedded wallets in regular apps with a login button is a huge innovation that is understated. The fact that you can pretty soon get to the point where on-ramping crypto with a credit card is pretty decent is a huge innovation. Yeah, I hope so. Failure rates are going down. They used to be like 80 to 90%. Now they're about 50 to 60. And they're dropping even lower, especially for NFTs, which are classified as a different category. And then you also have the emergence of actual low enough gas fees and on-chain scale, so you can actually put gaming and social and other use cases on-chain. I think that's what people miss, is that the fact that for users, it can feel like a regular app, and for developers, it can feel like a regular app, it's a huge unlock, and we actually really only got there over the past year or so.
Okay, so I want to make sure we have some time to talk about some of the novel things you're doing around the legal structure and the launch. And I think, as I said at the top of the stream, we'll have some other folks jumping on so we can dive into that with them as well. But my big question here, and I think the big question everybody asks these days, which is such a wonderful question for us to ask in crypto, is what is the business here? Like, help me understand what needs to really go right for Syndicate for this to just be an absolute gangbuster of a product, of a token, and of a business.
Yeah, I think the short answer is ultimately, like, will there be a world with millions in the future of networks that sort of all aggregate and ladder up to a truly community-owned internet, which in many ways is like the original promise of crypto and Web3 and what brought a lot of us, including myself and Will, into this space over a decade ago. So if you believe that there will be many networks, not just 5 or 10 or 20 or 50 networks, and I think importantly, if you believe that those networks are truly going to be controlled and owned by the token holders and the communities, programmatically in a decentralized way, on chain, then very likely that there's infrastructure that needs to power that, and we believe that our infrastructure is the best infrastructure to power that. So I think that's what needs to happen or play out over the next several years or decade plus. Of course, there are a lot of reasons. I think a lot of different hot takes as to why that might not be true, whether in general or in a certain time period. But that's the bet that we've made and are taking.
Yeah, and how does this strengthen the business of the application developers or ecosystem developers? Because I think it's pretty clear that like when we get to a point where it makes a lot of economic sense for an app to do this, they will. And if it makes economic sense for the app to do this, then you guys have a pretty clear business opportunity. But it seems like today we're maybe not at that stage. Sequencer revenues aren't as high as they maybe need to be to justify this, but maybe that's wrong. So curious where we are there.
Well, let me give you a real, a live example. I think what's happening with Hyperliquid's USDH is super interesting because what you're really seeing there is an enshrinement again of the stablecoin, but you're also seeing, right, like these providers basically foregoing on the yield and then redirecting that yield to the community, right, of token holders. That is actually kind of a new economic model of how chains can customize and enshrine protocol, like more and more functionality, more and more utility, more protocols, and ultimately more value into the network itself. Now, in our world, the most true expression of that is the way you enshrine that is into the sequencer natively. Like you actually code that into the smart contracts that are the sequencer. Hyperliquid could or can do that. It is very difficult to do though. We've seen teams that have tried to do this with off-chain nodes and stuff, and it's just very difficult. But our technology would make that much easier. So I think like you're already seeing that actually. Like you see Base and Solana have pretty high sequencer fees, but even like the USDH, like that's like the next thing, and it doesn't stop there. Like Tempo's enshrining an AMM and a DEX. Right. Same thing. You can take that all the way. Oracles, VRF, so on and so forth.
I feel like the word of the fall is going to be enshrinement. I mean, it could be fun. It could be a fun little meme to get out there. Okay, I'd love to dive into the token a little bit because you've taken some ideological decisions here that I think are really interesting and some practical decisions here that I think are really interesting. So can you give us maybe the high level of both?
Yeah, absolutely. So first of all, like Ian and I have always been a fan of DEX first launches. There's a time and a place for centralized exchanges. They serve a useful role in the ecosystem, but they shouldn't be the center of the universe. I know I'm preaching
eventually, but not just yet.
It's a hot take. Yeah, it's a hot take on crypto Twitter, even if it's not a hot take at 11 a.m. Essentially, like Adventure Gold was like for the loot ecosystem was DEX first, fair launch, And then Constitution DAO was anyone can participate, put in money, you participate in the token, no team reservations, same thing. Obviously, Syndicate's a little different. Like we have a team, we have investors, but what we wanted to do was to get as close to that fair launch ethos as we could. And what we said is we looked around and we said, okay, what are the most aligned communities? The Syndicate token involves staking on which rollups will be successful. And if you stake to the right rollups, you can get a greater share of rewards. We looked around and we were like, what ecosystems are closest to that? And the answer was Aerodrome. Like it looks very similar. You're instead of voting for rollups, you're voting for pools, but similar mechanics. And then we took it one step further and we were like, okay, let's look at launch mechanics. And we were chatting with Alex at one of our investor retreats. And we were like, oh, wow, like your launch mechanic of take a chunk of Aero tokens and distribute those as essentially initial liquidity to the first participants. That's an excellent way to do things. And we totally rethought our entire approach from that. So we were, instead of doing the whole give a broad-based airdrop, so people talk about you on social media, and then like get the centralized exchanges to list you by paying very large amounts of money, we instead looked and we said, okay, let's give two sets of airdrops. One is to communities that are aligned with us. So we airdrop to 100 plus communities and DAOs. Full disclosure, including you all, just so that people know. And then we also said, let's airdrop effectively to the most aligned community. Let's take 1% of tokens, let's put it into this airdrop pool, and people who vote for it get a share of that 1%. It's effectively an airdrop to the most aligned community we can think of. And it means that this is bootstrapped in a community first way, open way to participate if you're a V or a voter. DEX first. There's a time and a place for centralized exchanges, but you know, they aren't the center of the universe in this launch. And it's the second time this is being done. First time was Arrow, second time is us. So we'll see what the market does.
And I would just say 1% of total supply in the first 7-day epoch. So that process has started. Actually looking at Airdrome, I think we already have 2% of total votes, which is great. You know, only less than 12 hours in. But you know, we do have reserved an additional 6%, up to an additional 6% of total supply for ongoing sort of liquidity incentives into the Airdrome pool. So we're excited to see this market and this community actually build the market bottom up in a really kind of open and transparent way.
You got Josh and I to buy some Arrow tokens today, and hopefully Alex is excited about that. We're going to bring Alex up here in about 2 minutes, but I did want to touch on one final thing here. It seems like a big part of your launch sort of press releases was around the importance of Syndicate being US based and the legal structure decisions you made there. I'm wondering if you can quickly comment on that. And again, we'll get into the details of that with David here a bit later on today on the show, but I'm curious about the intention here and why that was so important.
Yeah, I mean, we're excited about it because we're the first network and token to natively launch from this structure with no offshore entities. I think a big part of this is Will and I, just as founders in our team, just have always wanted to do things the right way and help, you know, play a role in setting, you know, new standards that take our industry, this industry in general, which we love and have been in for a decade, like, you know, to the next level, right? So our token launch is like that, by really kind of approaching it in a community first, you know, radically different way. But also the structure was really important. And we didn't want to, you know, we wanted to walk the walk, not just talk the talk. So what that means is token holders have control over the treasury from day one when the network launches next week. It also means that everything is in the public and public governance and out in the open from day one. So there's no even ability to do kind of, you know, behind the scenes like deals that offshore structures, you know, provide for and enable. There's a lot of trade-offs associated with that, like a lot of, you know, operational complexities and friction. But we thought that, you know, it's the right thing to do. And the bet here is, okay, if America, which it looks like, even with Atkins's speech from the SEC, I think it was yesterday morning, that America will be kind of the epicenter of innovation globally for this technology. It was important for us to be like based here and building here for the world, but based here. And the Duna was like the purest kind of and best model for that. Providing token holders with limited liability protections and, enabling to true token holder voting and governance, like all of these reasons. So we're very excited to do this. And obviously Uniswap is now going to implement one, and a whole bunch of others kind of on the way, which I'm sure David will talk about.
Awesome, guys. Well, we'll leave it there. I'm sure you have a bunch of other buttons to go click in the various Discords that you're going to go live in for probably longer than 24 hours here now. Will, you're probably in it for... I think you got a 2-week time horizon. It's going to be your week.
It's going to be my week. Yeah.
I mean, I think the two opportunities on the table here are, if you're a VE voter for Airdrome, you can go and cast a vote towards the Syndicate token, and we'll of course include some of the tweets, etc., in this thread as we publish this content, so you can dive in. There's a lot of the questions I saw that were getting asked in some of the feeds have been answered in a bunch of your threads already. So everything from sort of the token allocations to more of the deep thinking around the business and the legal structure, etc. So make sure people can have access to that. But thanks, guys. Appreciate you hopping on and giving us a little bit more of a detailed look in what you're cooking, and we wish you the best.
Thanks so much.
Thanks so much.
See you guys.